Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Rehana, Earle and Melissa Thomas.
Welcome to The Tax Factor, the UK's top tax podcast. I'm Rehana, Earle, and I'm joined today by my colleague Melissa. So it's been a really chilly start to the year for everyone, I think, and things are certainly remaining very frosty for the Treasury, with both the Chancellor Rachel Reeves continuing under the spotlight and also the recent resignation of Tulip Siddiq. Last week, my colleague Robert suggested that Rachel Reeves in her New Year's resolutions might be thinking about how she could have perhaps talked about the budget and the framing of what's to come, perhaps in a slightly more positive light. But, you know, tax continues to be in the spotlight and we have much to talk about today on this podcast. Melissa, what's on your mind?
Well, can we still wish people a happy new year? We're halfway through January, yet to hit Blue Monday, 2 weeks away from the personal tax filing deadlines, and HMRC are continuing with their strike action, disrupting business customers, using personal tax operation services and the construction industry scheme, critically at the height of the self-assessment filing season. Rehana, what's going on?
Well, yes, it looks like we're starting the year with HMRC not being particularly helpful at a very busy time of year, given all the talk from the current government about boosting HMRC personnel to support taxpayers, along with commentary that we've certainly had on these podcasts around historically high waiting times for HMRC to answer calls. I think all of this is actually a bit of a blow to the government rhetoric around HMRC, bolstering support, and actually having 8 days of strikes in February is going to be a pretty challenging thing for them to have to kind of deal with. The action itself is taking the form of strikes that last 3 hours on different mornings over the period, and all taxpayers are being advised not to attempt to use phone lines. And HMRC have also warned that whilst the phone lines and web chat will be open as usual, callers may experience even longer wait times than usual. And as we know from prior podcasts, as I said, those wait times have just been going up and up and up over time. An HMRC spokesperson said that they have plans to ensure that they continue delivering the critical services during the industrial action and that they will redeploy staff. But of course, there's going to be further delays and backlogs created for taxpayers. Phone lines are expected to be impacted, including the employer helpline and the construction industry helpline. So HMRC are encouraging the use of all online services rather than waiting to speak to someone on the phone. And the reason behind the strikes is in a bid to get 3 members of HMRC staff who were basically kind of lost their jobs following trade union activity. So not the best start, I think, for HMRC in a busy period. So with that, though, someone else who hasn't had such a great start to the new year is Andrei Trechnikov, hopefully I pronounced that right, a Russian financier who has found the first tribunal have upheld HMRC's view that his 6 million London house was not mixed use and that he significantly underpaid stamp duty when he purchased it in 2021. Melissa, what are your thoughts on this case?
Indeed, the businessman has argued that the ground floor of the converted bacon smoking factory was a commercial space, despite it apparently housing a 900-bottle wine cellar, a pool room and a 40-foot private bar. The property was purchased at 1.2 million discount on the just under £7 million asking price, and he paid a mixed-use stamp duty rate of £277,000 instead of the full rate of just over £750,000. One of the main considerations in this was that the property was originally marketed by the estate agent as being a staggering conversion and one of the finest properties for entertaining that they have ever listed. This is the latest in a string of battles between wealthy taxpayers and HMRC over what kind of property falls under a mixed-use residence. So as we approach the filing deadline for UK personal taxes, I was once again amazed to see that there's been an interesting case regarding an individual who was served late filing penalties despite having no UK tax liability. Rehana, can you tell us more?
So, there's a taxpayer who's been charged late filing penalties of around £1,600. And this was after he was about 375 days late with filing his 2021 tax return. And so the taxpayer appealed on the basis that he was living abroad and that he didn't receive a notice from HMRC to submit his return. On receipt of the penalties, he took the case to the first tier tribunal as he believed that he had a reasonable excuse for not only the delay by virtue of living abroad at the time, but also that there was no tax liability ultimately. And in addition, he said that his situation was further aggravated by the ongoing COVID-19 restrictions at the time, which included postal delays. But HMRC rejected this initial appeal, and they stated that he had absolutely no excuse for appealing, and they subsequently upheld the decision in a statutory review, which was pursued by the taxpayer's agent. And from HMRC's perspective, they said that they sent a notice to file a return to his last known address, which is the same address that was confirmed by his agent in a conversation they had with him in February of 2024, and also that the notice was not returned as undelivered back to HMRC. So from the tribunal's perspective, they were very satisfied that the notice had been served, and they didn't believe that it was relevant whether or not the taxpayer had actually physically received the notice or not, based on the fact that it was issued to the correct address. So the point under consideration was whether the taxpayer then had a reasonable excuse for failing to submit on time. And basically, HMRC didn't think so. The first tier tribunal, therefore, had to review whether or not it was, in quotes, objectively reasonable for the taxpayer to have not known that a return was actually required. And during this process, on the basis that the taxpayer had filed returns for both 1920 and also 2021, which would have had similar sorts of income on it, they concluded that the taxpayer should have known. And actually, with a bit of basic research and Googling, etc., they would have known that there was actually a filing requirement, even though the individual had left the UK. And then on top of that, the taxpayer hadn't informed HMRC that they were spending time abroad. Based on all of those facts, the tribunal concluded that the taxpayer not knowing wasn't a reasonable excuse, and that any diligent taxpayer, in their words, would have put arrangements in place before they'd left the UK to ensure that their affairs were dealt with whilst they were abroad. So the tribunal sided with HMRC's decision. They found that the taxpayer didn't have any special circumstances that should lead to the tax department exercising any kind of discretion to reduce the penalties, and the appeal was dismissed.
So, Rehana, it used to be the case that if there was no tax, there was no penalty. When did the rules change?
So they actually changed quite a while ago, Melissa. They changed in 2011, such that a penalty would be charged even if there was no tax that was ultimately due. For those of us that have been around a bit longer in the industry and filing tax returns, we knew that prior to that, if there was no tax due, then any penalty would be cancelled once the return was actually filed. Despite these rules being around for quite a number of years now, I don't think this is going to be the last case that we'll see where a taxpayer is going to find it difficult to understand that they're being charged a fine, even though there's ultimately no tax to pay. And I think it's a different debate entirely as to whether or not we think that that's actually right and that people should be charged a penalty if there's ultimately no tax, and whether that's a fair approach and even a good use of HMRC's time. Personally, I don't think it is to chase down taxpayers who don't owe any tax but have simply amassed penalties, when actually there's probably other cases HMRC could focus on where there's kind of higher amounts at stake. But ultimately, these are the rules at the moment. I don't think they're going to change. And so I think taxpayers should be aware that penalties will be due if HMRC are expecting a return and it isn't filed on time. So for those certainly filing for this year, they've got a couple of weeks left and they need to make sure that they know what they're doing. And for those that are filing, if you do miss the deadline, then there's an initial late filing penalty of £100, but this increases to daily penalties, which start 3 months after the filing deadline. And if the taxpayer still hasn't filed after 6 months and then 12 months, there are further penalties. And so this can really all add up.
So what lessons are there for others out there who may be leaving the UK tax system behind? What do they need to do to ensure affairs are tidied up?
So I think, as the deadline approaches and obviously kind of going forward, I think it's a reminder to all taxpayers that they really do need to check their affairs and understand, even if they've moved abroad, that they still might have a requirement to file a UK tax return, particularly if they've got UK sources of income. Check your affairs, get the advice that you need, and if anything has changed, make sure that you've updated HMRC accordingly of your change in circumstances, and particularly any kind of changes in address or contact details, etc.
So speaking of the 31st of January deadlines, figures published by HMRC this week show that more than 92,000 people chose to spend their Christmas break completing and filing their personal tax returns. On Christmas Day itself, more than 4,000 people filed their tax return, with an impressive 23,000 clicking submit on Christmas Eve, prioritising ensuring they were tax compliant over peeling potatoes and prepping sprouts. Almost 53,000 people logged on to HMRC to file file their returns between New Year's Eve and New Year's Day, with 310 people submitting their return between 11 p.m. and midnight, just in time to raise a glass to toast the new year and sing Auld Lang Syne.
Well, I'd have to say good for them, Melissa, because, I'm sure there's plenty of people out there that still need to get that return done. So, Melissa, as everyone focuses on their New Year's resolutions, including you, I understand from our chat before recording, how might getting and staying fitter be less expensive than last year?
Well, we've another exciting VAT tribunal decision.
It's time for another bizarre VAT update.
This week saw the first ever tribunal to make a decision on how to interpret the VAT rules on sports drinks, which saw a significant win for company Global by Nature Limited and their Sun Warrior protein powders. So Global by Nature imports and sells various organic products, including powdered vegan food supplements, which are sold under the brand Sun Warrior. They sought a VAT repayment of over-declared output tax from HMRC, essentially challenging the need to charge VAT on certain protein powders from their Sun Warrior range. This was on the argument that these particular powders should be zero rated as food products and not attract standard rate of VAT being classed as a sports drink. So this was the first tribunal to consider sports drinks since the legislation was brought in 13 years ago. The definition of a sports drink is twofold, broadly looking at what the drink contains and how it is marketed. Soft drinks are deemed to contain significant amounts of carbohydrates, usually sugar, and may contain salts such as sodium and potassium, and then advertised and marketed in a certain way. In reviewing the ingredients for the 3 Sun Warrior products, the tribunal agreed they did not actually meet the definition of a sports drink, as they contained minimal, not significant, levels of carbohydrates. So the tribunal therefore concluded that all 3 protein powders should be zero rated as food products, and that none of them should be treated as sports drinks for VAT purposes.
Interesting, especially given it's such a big industry. So what do you think this might mean going forward, Melissa?
Well, this industry, an ever-growing industry, is anticipating a mass review of similar products where the absence of significant carbohydrates could lead to similar reclassifications and additional retrospective reviews of past VAT treatment for other similar products, helping many to enhance their physical performance or accelerate and support physical recovery. So no doubt this will mean further exciting and obscure VAT cases for future Tax Factor episodes.
Which I'm sure our audience can't wait for, Melissa.
The Tax Factor from Blick Rothenberg.
So, unfortunately, that's all we have time for this week. I hope everyone has enjoyed this podcast. And if you have, why not try our sister podcast, Brave Business? Give it a listen. It's aimed at entrepreneurial businesses, hosted by journalist and broadcaster Declan Curry. The latest episode looks at neurodiversity in business. And joining Declan to discuss this topic is Blick Rothenberg partner Gail Cobley, with guests Ben Branson from the Hidden 20% charity and podcast series, and Bina Kandola from consultancy Pen Kandola. There's a whole series available on the Blick Rothenberg website or wherever you get your podcasts, and even one with me on the topic of global talent, which of course is particularly good.
We release a new episode of The Tax Factor every Friday on the Blick Rothenberg website and all the usual podcast platforms, so you can listen wherever is most convenient. We record and release them in less than 24 hours, so you always get the very latest news and updates.
If you enjoyed the podcast, please subscribe and give us a rating or review. Next week, Robert is back with VAT expert Gabby Donald. Thank you for listening and have a great weekend.
Goodbye.
That's the Tax Factor. If you enjoyed the Tax Factor, please like, share and subscribe. Join us again next time on the UK's top tax podcast, The Tax Factor. The Tax Factor is a Blick Rothenberg production. Copyright 2025.